Advance payments are one of those areas where the tax rules feel unfair on purpose. If a customer pays you now for services you'll perform later, the default rule is it's income when received. That's true even for many accrual-basis taxpayers. On the EA exam, they'll test whether you can separate the general rule from the limited deferral exception under Section 451(c). Start with method of accounting. Cash method is simple. Income when received, deductions when paid. Accrual method is different. Income when earned, expenses when incurred. But here's the trap. Advance payments for services generally get pulled into income in the year received, even though the work happens later. So don't assume accrual automatically means match it to the service period. Section 451(c) is the relief valve for certain accrual taxpayers. If you receive an advance payment for services, you can elect to include in income the amount you recognize for financial statement purposes in the year of receipt, and then pick up the rest in the following tax year. The key limit is brutal and very testable. You cannot defer beyond the next tax year, even if the services last multiple years. Also know what Section 451(c) does not cover. Prepaid rent, prepaid interest, and prepaid insurance premiums are not eligible for this deferral approach. Those are generally fully included in income when received. On the EA exam, they love mixing prepaid services with prepaid rent in the answer choices to see if you know which bucket gets deferral and which one doesn't. Warranties and service contracts are where the facts matter. A standard guarantee or warranty is generally not something an accrual taxpayer can push out just because it covers future periods. But Section 451(c) can apply to certain advance payments tied to these arrangements, again with the same rule. Recognize what's earned in year one and the rest in the next year, no further. For a service agreement on property you sell, lease, build, install, or construct, there's a specific requirement. The service agreement must be optional in the normal course of business. In other words, the customer can buy the product without the service contract. If it's bundled and mandatory, you're not in the clean, optional service agreement fact pattern they're aiming at. Use the Albatross Copiers example. They get $12,000 on July 1st for a one-year optional service contract earned at $1,000 per month. Under the Section 451(c) approach, they can report the earned portion in 2024, July through December is 6 months, so $6,000, and then report the remaining $6,000 in 2025. Even if the contract were 3 years, the deferral still can't go past 2025. Which statement about the accrual method of accounting is not correct? One option says advance payments for services are generally income when received. Another says accrual reports income when earned and expenses when incurred. Another mentions deducting when economic performance occurs. And one option says income is reported when received and expenses when paid. Think about it. The incorrect statement is the one that says you generally report income when received and deduct expenses when paid. That describes the cash method, not accrual. The tempting distractor is the advance payment statement because it sounds like cash method, but advance payments for services often are taxed when received even for accrual taxpayers, so that one can still be true. Cedar Valley Foods is an accrual-basis C corporation. What is required for the company to deduct an expense? Some choices focus on paying by year-end, or paying before deducting, or receiving an invoice. One choice says the company must meet the all events test and have economic performance. Think about what accrual actually requires. The correct answer is the company must meet the all events test and economic performance must occur. Payment is not automatically required under accrual, and an invoice by itself doesn't control timing either. The tempting wrong answer is must receive a bill, because it feels like proof, but accrual timing is driven by the legal liability being fixed and economic performance.